All right. Hello. Good morning, trade pros. Happy Monday morning. We're resuming this market sell-off that really started to propel forward last week. I'm going to talk to you guys about a lot of things today. Today's morning market update, we're going to talk about crude oil, gold, and Bitcoin. I'm going to give you guys some levels to trade off of and some ideas. And we're going to talk about bond yields and how they've roiled the market. An update on that because I've been hammering on this bond yield topic for a very long time, and finally people are catching on. And we're also going to talk about some defaults in a rating from the S&P 500 rating company, an update from them. So stay tuned. It's going to be exciting. First and foremost, let's start by taking a trip around the world so far. What's happened in the markets overnight? In Asia, Japan's down a whopping 2.6% in one session. So Japan and Asia is getting hit hard. Hong Kong down 1.1%. And China's up 0.7% while India's down 0.9%. So you're seeing a general weakness across the markets here in Asia. In Europe, London's down another 1.2%, while Paris is down the same, and Frankfurt's down 0.8%. So the weakness that starts in the Asian markets, remember, Asian markets open first for the week. It opens on Sunday at around 6 p.m. Eastern time. Futures open. Tokyo and Japan opens at 7 p.m. Eastern. So they traded weak. That weakness spilled into the European session, and now we get to see what the U.S. session's all about. In U.S. so far, S&P, Dow Jones, in the United States futures market, the Dow Jones index is down the most, down 0.8%. So the 30 stocks that are included in the basket of the Dow index are the weakest this morning. Use that information wisely. That's a very powerful thing to know for intraday correlation. Keep an eye out on the Dow. The Dow's down 0.8. S&P's down half a percentage point. NASDAQ's down 0.4%. So equity weakness across the board today. Here's something you got to be cautious about. I'm looking at volume, and on this downside, it looks like volume's starting to stabilize a little bit. What we could do in the next 1 to 2 days is bounce back. Remember, it's called the dead cat bounce, potentially. What you need to do as a trader right now is determine whether that bounce is the beginning of a new rally to all-time highs or whether it's just a shorting opportunity and then it's going to hit new lows. How do you determine that? You follow price, you follow volume, you follow footprints, imbalances, levels, delta. You follow a whole bunch of stuff that we teach you in our course. So feel free to sign up. I think in the next couple months, you're going to have a blockbuster opportunity as a day trader and as a swing trader. We got some volatility coming out. This market's double-sided. We've seen the bullish case since about 2011. It's done nothing but rally. And this selling is something that's reminiscent of what happened in 2016. And stay tuned because I think there could be some more to the downside. We're going to be, this week, we're going to start out by shorting rallies on weak volume, and then we're going to roll over to that bias and continue to press the downside if there's opportunity. If we're clearly wrong, we're going to reverse and start buying. Here's what I want to teach you guys with this opportunity in this moment in the markets. You don't have to be right. You didn't have to predict the sell-off. You don't have to predict the next rally or drop. All you have to do is be profitable. You don't have the future. The past is already gone. All you have in life is the present moment. All right. And use the present moment, use all the data and make decisions, but don't think about what could happen, what has happened already. Just roll with the momentum and you're going to do incredibly well. Give up the notion that you have to be right and start trying to be profitable, and life will change for you as a trader. I promise you. All right. Crude oil is down 0.5%, currently trading inside of the 64.96. So we broke the 65 key handle. Next level to the downside of support is 64.22, about 64.55. There's a consolidation going on at the daily chart on oil. That's the bottom of that support. All right, there's a lot of stop losses below though. So if you're going to buy that bottom of the consolidation, remember that the second you buy, you also become a stop loss below that price action. So if that consolidation support doesn't work and that support is broken, look out to the downside, stop trying to buy it, and just lean on it in short rallies. Again, don't be right, be profitable. Gold prices are up about 0.2%, and the next support level for them is 1,330. Below that, 1330 is the support, 1350 is the resistance. So gold's got a consolidation going on a little bit, just like oil does. One thing you need to watch for as a trader is the US dollar. If that US dollar rebounds, like I think it will, it's been a really downside trend, and on the rebound, it's going to take out some buy stops. on an upward pop of the dollar, watch for weakness in gold, oil, and equities. So the US dollar is front and center along with bond yields. All right. Bitcoin today is down 7.4% to 75.84 and continues to slide. All right. When Bitcoin was trading at 10,000, I told you guys on YouTube, yes, we got a little bit of a pop off the support, but volume was non-existent. That tells you nobody's buying this, neither should you. And I said, stay aside. All right. It's too early to be getting into Bitcoin. Let it continue to drop. The analogy here is the falling knife. If somebody threw a knife from the 15th floor and you're on the ground floor, would you try to catch it? There's one way to catch that falling knife. Move out of the way, let the thing drop on the ground and pick it up. That's the same thing we're trying to do on Bitcoin. We want to see that knife stop and bottom out by hitting the ground, so then we can pick it up and run with it. And now it becomes a tool once you have that knife. When you're trying to catch it as it's slicing through the air, it's a liability. All right? So that's what I'm trying to tell you. That's an analogy I want to bring you up to par with, because catching the falling knife is what a lot of traders try to do. They think that's the only way to make money, and that's dead wrong. That's absolutely wrong. Literally dead wrong here if you catch it the wrong way. Bitcoin broke the 61.8 Fibonacci support level from the March 25th, 2017 low, and I think that could continue. That could intensify the selling. Here's the thing I want to tell you. $6,981 is the next key support on Bitcoin futures, but watch for that volume. If price is dropping to that level and volume is skyrocketing higher, just because it's a level, it's not a trade. All right. Before you do a trade, you have to have a level. So step number one, pick a level. All right. Then after that, just say, look, is this level qualified? Is it reacting to this level? If not, draw another level below, get out of the way. Step number one, is the level working? Step number two, now it's time to qualify a trade. We haven't checked off step number one yet. There isn't a level that's worked the support on the way down. We keep watching for those levels, but there hasn't been one yet. The next potential level is 69.81. That's not a buying level. That's a support level. It's not a trade. It's a level. All right. Big difference. Watch that volume. When the sell-off is capitulating and volume decreases and it stops at a level, you could start to consider getting long on some of this Bitcoin stuff. I think we've sold off quite a bit, so keep an eye out for that. If volume continues to the upside as prices drop, get out of the way. Let that knife fall. It's still on the 5th floor and dropping. You know what I mean? There's no ground support yet. All right. 10-year treasury yields are up another basis points to 285. I've long been talking about this. It's been months since I've said, watch the bond yields, watch the bond yields. On Saturday, I posted a video about the stock market crash, and somebody puts in the comment box, are you not watching bonds? Have you not watched more than one of the YouTube videos we've created? So the bond yields above 2.5% has triggered a lot of equity selling. Watch that 10-year yield. All right. That's what you need to be fixated on right now. If the 10-year yields increase in the United States, there's going to be downside equity pressure. But above and beyond the 10-year yield, look at other yields as well. Look at the Bund out in Germany. All right. That's a massive index that all European traders follow. Look at global yields. If global yields are increasing, global equities will continue to sell off. Yields going up with the US dollar going up means downside in equity. Don't ever get it confused. That's always been a key indication. A lot of institutional money managers have said yields above 2.5% will be the timing mechanism for a reversal for this bull. And so far, it's been happening. So keep an eye out. Borrowing costs are increasing. And we'll talk about borrowing costs in one more minute. This morning, you really don't have many news. You got the PMI Services Index at 9:45 right after the opening bell. And you have the ISM Non-Manufacturing Index at 10 a.m. All right. Here's one thing I'm going to tell you on these yields increasing. And this is the last point I want to make for the day. The S&P 500 Global Ratings Company. This is a company who's in charge of creating ratings for certain assets and even countries and even their debt. So all instruments are rated by some institution. S&P 500 Global Ratings is a massive company. So here's what they've said. They say that the agency estimates that the proportion of corporations whose debt to earnings exceeds 5 times stood at 37% in 2017. All right, what does that mean? That means companies are taking on leverage. They're leveraging their assets. So that's at 37% in 2017, or 4 out of 10 companies were leveraged more than a 5 factor. Let that sink in for a second. All right, and they said that compared, it was before the financial crisis took place, it was 32%. So we've exceeded a debt leverage ratio that was we've exceeded the ratio of the previous financial collapse. All right, that led to the massive sell-off. It stood at 32%. We're now 5 percentage points higher on that leverage ratio. And what the S&P 500 company says is, after removing the easy economic punch bowl, that could trigger the next default cycle. As yields go up, borrowing costs go up, and as borrowing costs go up and increase, companies start to feel the pressure, investors feel the pressure, selling starts to hit the tape. All right, anyone that holds margin on their accounts is susceptible to higher interest rates. That makes their carrying costs higher. Carrying costs higher means you're going to lighten the book a little bit, sell some equities so you could reduce your margin exposure. That leads to selling. All right, so anyway you look at this, strong bonds lead to selling in equities. Keep an eye out on bond yields. Keep an eye out on the US dollar. Watch for selling rallies. When rallies go up and volume's weak, get in there, hit those levels, and you got a lot of trade opportunities. Today we're going to be trading in the room. We're going to be starting to look at the downside, but if we start to see any kind of strength, we won't hesitate to flip over and go to the bullish side. That's why I'm very careful when I give you guys sentiment, because sentiment is going to get you murdered. Trades is what make you money. And a trade doesn't have to be with your sentiment. You don't say, I'm short. It's going to go down, therefore I'm always going to short. And it's going up 100 points and you're still short. That's how you lose money. You start with a bias, you then find a level, then you confirm the level, and then you get the trade. You don't go from idea to trade because you're missing that all-important middle step of levels and qualifying your trades. All right, I hope this has been incredibly helpful for you. And you guys have yourselves a great day. This week we'll be traveling. I'll be going to Los Angeles at 5 p.m. Eastern today. I got a flight out there, but it's not going to interrupt their morning market update schedules. I started booking my travel and everything else around what I do here with TRADEPRO Academy. So that's the good news. So I'll see you guys tomorrow morning at 9 a.m. from LA, bright and early. It'll still be dark the next morning market update. Jeez, that almost made me yawn. You guys have a good day. Take care. All the best. I'll talk to you guys tomorrow morning. Trade careful, manage your risk, and always trade like a trade pro. Take care. Let's go open up the trading room, and I encourage you guys to try it out. You get a 14-day money-back guarantee if you don't like it. It's risk-free. When are you going to find a risk-free proposition in markets? Never. That's when. See you later, guys. I'll see you tomorrow at 9 a.m. Ciao. All right, trade pros. Let's open up the room. I got some levels set and ready to roll. I think we're going to get another opportunity of volatility today and how we trade.